It has never been harder to make money trading than right now. At least that's how I feel. I feel trading has changed a lot in the past years, and without resetting your mindset and adjusting your beliefs and psychology, you will struggle to adapt to the new markets. So here's what you should focus on if you want to stay in the game long term. So I was browsing Reddit last week and I found an interesting topic. What started as an open discussion about the ICT method, it quickly turned into a whole debate. ICT students claimed this is the only way to trade, quite aggressively to be honest. Then others intervened and challenged them, saying that price action is better. Others said that all you need is a couple of reliable indicators, and so on. Internet is filled with conflicting advice. Let me share the reality. There is no one way to trade the markets. You see, trading is not a one-size-fits-all approach. What works for one person may not work for another. The markets are dynamic and ever-changing, and there are countless strategies and techniques that traders use to navigate them. Trading is not a rigid set of rules, but an art form that requires adaptability and self-discovery. Each trader has unique strengths, personality traits, and risk tolerance, and these factors will shape their trading style. The key is to explore, experiment, and discover what works best for you. There's no shame in trying different approaches and adapting as you gain experience. So don't get caught up in trying to find a single right way to trade. Embrace the diversity and flexibility of the market. In my first years, I was often drawn to the shared knowledge among the trading communities. I immersed myself in online forums, group chats, and trading webinars, eager to absorb the wisdom of fellow traders. However, I soon realized that while these resources were valuable, they could also be a magnet for herd mentality. In the world of trading, it's important to think independently and make your own decisions. Following the crowd might seem like an easy way, but it often leads to average results or even losses. You need to think outside the box and take a different approach. Don't blindly follow what everyone else is doing. Instead, do your own research, analyze the market, and make decisions based on your own analysis. It took me many years to realize this. Then I decided to break free from the herd mentality and embrace a contrarian approach. I started questioning the prevailing sentiment, analyzing the market from a different perspective, and seeking unique opportunities that others might have missed. This shift in mindset will open up new possibilities. By going against the crowd, you have the opportunity to discover unique traits that others might have missed. You can make trades that set you apart from the rest. Remember, it's not about doing what everyone else is doing. It's about finding your own path, making your own choices. So let me ask you a question. Do you think that luck plays a significant role in trading? Most beginners certainly think so. But if luck is so important, then what is the point of all the learning? How could we control something so unpredictable? Let me tell you what I think. Luck isn't a deciding factor for your success. Sure, you might get lucky on several trades, or you might be unlucky in some cases, but you have the power to make your own luck. You see, trading is not just about luck or chance. It's about making informed decisions based on experience, skill, and discipline. Sure, there may be unpredictable elements in the market, but it's up to you to navigate them wisely. Successful traders understand that they can't rely solely on luck. They invest their time and effort into learning about the market, studying different strategies, and developing their skills. They develop a plan and stick to it, even when things get tough. If you do these things, you won't blindly hope for luck to come your way. Instead, you're creating your own luck in the markets by being prepared and disciplined. From the very first moment, I was captivated by the allure of the markets, the thrill of potential gains, and the promise of financial freedom. But at the same time, I was also aware of the risks involved, the stories of traders who lost everything overnight, and the inherent unpredictability of the market. I was, and I still am, a very conservative trader, and this constant tension between risk and reward still makes me hesitant to take action sometimes. But trading is not about avoiding risk altogether. It's about understanding and managing it effectively. In fact, taking calculated risks is an essential part of the trading game. Trading isn't about seeking a risk-free environment, but about understanding and mitigating risk to protect your capital while still pursuing opportunities for profit. You can't eliminate risk entirely. Without taking risks, there can be no reward. So this is what I've done to improve this aspect. I started by setting clear stop-loss levels to limit my exposure. Before each trade, I know the maximum amount I am willing to risk, and I don't change it during the trade. Next, I diversified my trades, spreading them across different markets to reduce the impact of any single market movement. When you're swing trading like me and you stay in the trades even 2 or 3 weeks, this is very important. Finally, I adopted proper position sizing techniques, ensuring that my trades were proportionate to my risk tolerance and the account size. By implementing these principles, I gained control over the volatile nature of the markets. I no longer feel paralyzed by the fear of losses, but instead I embrace this calculated risk as an integral part of the trading process. As you know, in the world of trading, it's easy to let our thoughts and emotions cloud our judgment. We might have biases, assumptions, and preconceived notions about how the markets should behave. You enter a trade convinced it will only go up, but instead it goes the other way. But here's the truth. The market doesn't care about what we think. The market, with its complex dynamics, it's not a reflection of our personal opinions or aspirations. You need to understand the importance of staying objective and focusing on what the market is actually telling you. Instead of relying on our thoughts or opinions, we need to pay attention to the price action and the trends that are right in front of us. So what, you initially thought the market goes up? So what, you lost the trade? If your initial opinion was wrong, but the market showed you it might go down instead, don't be stubborn. Consider shorting the market. By trading what you see, you will slowly diminish the influence of your emotions and biases. Diminish, not completely remove. You let the market guide your decisions, rather than trying to force it to conform to your expectations. There's an interesting quote related to the previous topic. The markets are always right. The only question is whether you are right or wrong. This simple statement challenged my initial perception of trading as a game of outsmarting the market. But trading is not about proving the market wrong. It's about aligning our strategies and decisions with what the market is telling us. The market, with its vast pool of information and dynamic nature, holds the ultimate authority over its direction. So successful traders don't fight against the market. Instead, they listen to what the market is saying and adjust their approach accordingly. So remember, the market is always right. After a certain period, most traders encounter a humbling reality. The markets are constantly evolving, and what worked yesterday may not work today. You probably faced this yourself. You had a good strategy which made you money in the past, and suddenly it stopped working. It happened to me several times. I soon realized that I couldn't rely on a static set of rules or strategies in a world that was constantly changing. I needed to adapt and evolve my approach if I wanted to survive in these dynamic markets. Successful traders understand they can't cling to outdated strategies or get stuck in their old ways. They embrace change and stay ahead of the curve. They continuously learn, adapt, and refine their approach to keep up with the shifting market conditions. Flexibility and adaptability are the key to survival in the trading world. Finding your edge is essential for your success in trading. It's about identifying your unique strengths and leveraging them to gain an advantage in the market. Having an edge basically means finding an advantage over others and exploiting it consistently. It's like having a special skill or knowledge that sets you apart. It could be a specific strategy, a deep understanding of a particular market, or a signal from an indicator. Whatever it may be, it's about leveraging that edge to gain an advantage. How do you find it? It's not easy. You invest time in self-discovery, explore different approaches, and you experiment a lot. You explore different strategies, study the markets, and find what resonates with you. And once you found your edge, you refine it, practice it, and make it a cornerstone of your trading strategy. Like I said, it's not something you discover in one day. As an aspiring trader, I was initially captivated by the adrenaline rush of constantly monitoring the markets, analyzing charts, and making quick decisions. I believed that my success depended on my ability to react swiftly to every market move. I soon realized that this constant vigilance was not only time-consuming, but also fueled emotional responses that often lead to impulsive and harmful decisions. One day, I stumbled upon the concept of the set and forget method. This simple yet powerful approach resonated deeply with me, offering a break from the constant stress and the anxiety associated with overtrading. You set your trade parameters, your entry and exit points, your stop-loss levels and profit targets, and you can let the market do its thing without constantly second-guessing yourself and without constant monitoring or interference. It allows you to reduce the noise and emotional temptations that can often lead to poor decision-making. The set and forget method promotes discipline and removes the urge to make impulsive changes based on short-term fluctuations. Let's admit it, we trade driven by an insatiable desire for wealth or financial freedom. And it's natural to want to make as much money as possible when trading. We all dream of those big wins and financial success. However, greed can be a dangerous trap that leads to poor decision-making and unnecessary risks. You reached your profit target, but you get greedy and you let it ride even more. And instead of making more money, you settle for much less. Or instead of placing realistic take profits, you put them at a very large distance. You need to understand the importance of maintaining a balanced approach, setting realistic goals, managing your expectations, and avoid being consumed by greed. Trading is a marathon, not a sprint, and consistent, sustainable profits are more important than chasing home runs. Success in trading means an accumulation of modest profits over time, using an approach that focuses on long-term growth.